What is up, Prog family? We are the
guys.
Great Canadian Apes.
Yep.
My name is James Marin.
Jim Marin.
And I'm sick as a dog right now. So Jimmy is going to be taking over this episode. As you can hear in my voice, I can barely talk right now.
There we go. So we're going to be shorthanded. Got to work with it.
But I just want to wish everybody a Merry Christmas or whatever holiday you're celebrating. Hopefully I'll be back before Christmas on an episode. If not, have a great Christmas and we'll see you guys after.
All right. Thank you, James. So highlights for December 21st. We'll be giving you an overview of how much money Progenity raised thus far in Q4. Ortex and Fintel short squeeze data. Prog is not going away. A look at the weekly options chain and what price is optimal for the hedgies. And we'll be giving you our price target for this week. Prog is looking very good long term, not financial advice. Progenity has raised $160 million in funds internally in Q4 in 2021. They've raised $44 million through the stock sales for their warrants, $20 million raised by retiring debt, as stated on October 26, $10.5 million from sale of discontinued operations in yesterday's SEC and their press release, and $90 million in sale from their prospectus in November 22nd, which in yesterday's press release they alluded to, or that they did say they did raise funds through equities, and also said that they wouldn't have to sell any more shares to carry them through to 2023. On the European market in Germany, Prog was even. Previous close of 2.12 euros, opened at 2.18, high of 222, low of 212, and closed at 212 or 239 US. Hello to everybody in Europe. Prog perhaps is the most manipulated stock in the market. And I read that last night on the Prog Reddit. And we'll see this in a moment. Prog's down a penny. Previous close was 244, open at 248, high of 249, low of 237, and closed at 243. In the pre-market, it was actually trading higher than the 250, but the hedgies got it because there was that announcement, which the press release wasn't until 420. And so the entire sale of 10.5 million and the disclosure that they wouldn't have to sell any more stock through to 2023 to raise any funds, that all happened after hours. And the stock actually went up 10 cents. But as the hedgies do, before it even started, they rammed it down again. Today's level of support was at 239. The level of resistance was 248. Past levels of resistance have been at 270, 287, and $3. Levels to watch on the downside was 225 and $2. And to be able to take a look at this, now we see the line for the support level at 239. We see touch points here, here, and here. And so there was definite support at the 239. The resistance level seemed to be right at 248. So they didn't even give it to the 250. 250 is up here. But it didn't really touch past 930. And all they gave, as soon as it got to be the 248, then they drove it down. 248, drove it down. 248, drove it down. And so they're consistent with this. And there's no doubt that the indicators such as Bollinger Bands, which I have here, the 50-day and the 200-day moving average, these are all indices that are reactive based on the price. And we know that the hedgies have this plan in mind to be able to keep the price down under 250. And they've been doing it for the last couple weeks because of that's the best price based on the calls and puts. We even see that here, right at 1147, we have a golden cross. The 50-day moving average is going from below and going above the 200-day moving average. And so that should give, good price increase. And it doesn't, because right here we have a candle right at 212 jamming it back down again, making sure it's staying back down, making sure it's coming back down. So they're even looking at the indices that they know we are looking at, the average directional, the MACDs, the 50-day moving average, etc., and how we would react to it. It's built into their algorithm. And so even though we had a golden cross, all of a sudden price comes down. With the Bollinger Bands, generally it would go to the top of the Bollinger Band before people would sell off, but I believe they were focused in on this golden cross and wanting to be able to ram the price down. And they did. Throughout the day, they manipulate the price to be able to suit what's going to be best for them for the calls and puts. To take a look at the options expiring Thursday, December 23rd, over 667,000 calls and puts are at $2.50. There's only 120,000 at $2. There will be another battle this week for $2.50. There's not a huge incentive for the shorts to go for the price to be lower than $2. However, if they still need to recover previous shorts from under this level, they may be doing so as retailers are Christmas shopping. This would then be a Boxing Day special for Prog. Notice that 96% of the calls are out of the money at the current price of $2.42. And 82% of the puts are in the money. So it definitely favors the hedgies, who are, in general, are the ones that own the puts and sell the calls. Although anybody can do it, of course. All right. So yes, the Grinch. The Grinch is trying to take away the Christmas tendies while the retail investors in Whoville are preparing for celebrations like Christmas. Now, who played the Grinch? Who was that? I'm hearing Jim Carrey, but I don't know. I think it's Kenny Griffin. Hey, Kenny Griffin, here we go. Yeah, there he is. That's what I thought. Yeah, and so Kenny's trying to take those Christmas tendies away, so watch. $2.50 is what they're going to drive the price to be under. Looking at the Ortex data, short interest change was up 2.62%. Today being Tuesday, this goes back to Friday, and so there was 5 million that were put into the market. And we saw, and even with that, the price did go up to the 269. The return shares, 4.48 million. And again, that could have been from Ethereum returning some shares, and the Citadels, Jane Street, Susquehannas, etc., could be trying to drive the price down. The utilization was at 96.46. Cost to borrow, 38%. Days to cover, 0.35, so they can heavily manipulate this because the volume is currently quite low. Shares on loan, 28 million, just down 3%. Percent free float on loan is at 26.75%, which is substantial. The estimated short interest of the free float on loan is 20.14. And they certainly could get caught. The shorties could get caught if there's a big catalyst, when there's a big catalyst. Only one of those, whether it's preeclampsia, whether it's anything with the Crohn's and colitis, with the two big pharmas, any partnership, any merger, any acquisition, all of a sudden there's going to be a catalyst, and the shorts could definitely be caught. Short interest, as per Fintel, 18.1 million shares. Days to cover, they have it higher at the 1.3. Short interest, percent of float, 17.3. Dark pool short volume of 3 million shares, and then our dark pool short volume of 48% is double what it should be. Short squeeze score on the leaderboard, we moved from 99 up to 47. And so that's a substantial increase. Still nothing that it's going to be a short squeeze tomorrow or anything like that. But if that catalyst happens, they could get caught, and that'd be sweet. Short share availability, 350,000. So there's plenty available at a current rate of interest of 34%. Looking ahead for the rest of the week and for next year, hedge fund price targets will they're going to be tried for under 250 for December 23rd, and perhaps gunning for the under $2 to recoup earlier shorts. So watch for that. Watch for those levels of resistance. Due to tax season, investors who bought Prog at levels over 250 and could be looking to sell to capture tax losses, putting downward pressure on the price. Often they do buy back in early January. The announcement of a merger and acquisition partnership for a new drug or any other catalyst will likely not occur over the Christmas season, we don't believe. So no FOMO buyers coming in. It's just going to be where we're at right now. Perhaps the most manipulated stock in the market. Our price target for the next 2 weeks will be in around the $2 to $3 level. Progenity has raised, so highlights for the day. Progenity has raised approximately $160 million thus far in Q4, which is awesome. Progenity has reduced expenses by $145 million annually. They're poised to be profitable as soon as one of their many products hits the market, such as preeclampsia, any of their gastrointestinal products, the drug delivery system for those for diseases such as Crohn's and colitis, their oral biotherapeutic delivery system for diseases for diabetes, for the drug Humira. Any one of those could be a catalyst that could rocket this stock. And we're watching for that in the first quarter and two in 2022. Ortex and Fintel short squeeze data. Prog is not going away. 47th out of 5,000 companies. The weekly options chain have 96% of calls out of the money, 82% of the puts in the money. Optimal price target for the hedgies is under 250, with 667,000 calls and puts at the 250 mark. Price target for the week, we feel, is going to be in between the 2 and 250 level. Prog is looking very good long term. Not financial advice. Have a great day there, Prog Nation. We're missing James, and we'll see him again soon. Take care, guys. Bye-bye.